Is your portfolio down? Is your portfolio down? I bet if you invest only in Bitcoin, crypto, and US stocks like the NASDAQ, then your chances are your portfolio is down by something like 20, 30% from just, a few weeks ago. Now, I've been saying to folks in my Discord, on social media, to hedge against that risk. Unless think you're like 90, 100% accurate, confident in picking the top. To hedge against that risk, even a recession risk in the United States, whatever it is, basically there are about 2 or 3 things we can look at. One was obviously gold, been saying that for a long time. Another one was China and Hong Kong stocks, right? They've been taken off because of this AI boom. Been saying that for quite a long time as well. And also basically lately, European weapon stocks. Some of them have doubled in just like 2 months. I mean, if you're a crypto guy, you might think, oh, that's not a lot. But it's a lot better than seeing your portfolio go down 50, 70%, right? So especially if you're writing real money on this. So for example, today we're going to look at what's going to shape the future. This is going to be a highly, highly unpopular episode. A lot of people get very triggered when I talk about Chinese stocks, right? But you know what? Your hero actually invests in a lot in China. Who am I talking about? I'm talking about Elon Musk, right? I bet like 90% of the people sitting in front of the screen right now worship Elon Musk. He's like your hero, right? Especially the Republican MAGA guys. Guess what? His whole life's invested in China. His largest Tesla factory is inside Shanghai. And basically most of his sales come from China. Especially now after Americans and Europeans burn all the Tesla cars. So basically, if the world's richest man and your hero is all invested in China, why shouldn't you be looking at their AI? I'm going to be talking about comparing US AI and Chinese AI and US robotics and Chinese robotics today. Super Bowl of the century, an episode not to be missed. Super Bowl of the human race, right? Happening right now between those two. Before we do that, just for 30 seconds, let's answer the question of which crypto exchange does Pablo He-Man use? Well, Pablo uses this exchange that is basically non-KYC. That means you don't need to show your ID. And now you get a chance to win a BMW R1250 series, nice bike right there, and Rolex, or a trip to Dubai, all these great prizes just by signing up and trading. And this is the special deal Pablo He-Man made just with Bitunix. If you're watching this on YouTube, then the link is in the description below. The special Pablo He-Man Bitunix deal. The link is in the description below. But if you're on any other platform, such as this one, then just go straight to my, such as this one, right? And then you just go straight to my profile page and then click on this Stan link here. First thing that comes up, and obviously non-KYC means they don't need to ask you for your ID. That means, the IRS can't see you, the tax office can't see you, FBI, CIA, nobody can see you. That's why Pablo likes them so much, and only on the Pablo He-Man link. All right, let's get back to this smashing episode we're gonna do right here. So basically, what we're looking at is, first of all, we've all seen gold has done well, right? Like basically almost like a 70-80% run in the last 1.5 years. But another thing that has done well, other than European defense stocks, is this. Right? Is this. This is the let me put it on the weekly chart. Let me put it on the daily chart. This is the Hang Seng Index of Hong Kong. Now, near the end of last year, I basically posted, right, 2024, I basically posted saying that I think we're basically going to play out this cup and handle pattern, right? So far, it's played out, much better than I expected. I thought it was going to do this pullback thing, right, around this 22,000 area on the Hang Seng Index and pull back and then go up. It's actually easily shot above my target. And now the resistance is around this 25K area. We can easily see that. So the issue is this. Now, this index that I was mostly focusing on was actually not the Hang Seng Index, which is kind of like the SP 500, but I was looking at the Hang Seng Tech Index, which is this one, because it measures it. Well, it's the tech index. It's where all the tech stuff's in there, like the AI and robotics stocks of China. They would be in there as well. Let's put it on regular chart, and we can see here. So this is basically, it's had a big drop, right? From peaked a year before US did, and that's because the China government itself cracked down on their tech sector for monopoly, right? I mean, US government does that as well. It literally broke up Microsoft into like 4 or 5 different companies. It also did that to Standard Oil, just to name a few famous examples. And so we've had this massive drop, and folks in my Discord knows that we've been buying a lot of these dips, right? And I thought it would be shoulder, head, shoulder, and then go, and then take off. But this shoulder didn't play out. It turned out to be a lazy, longer shoulder here, and then we take off. So basically, it's just once we clear this area, that's 5,000 area, then we've broken out, right? We've broken out, and now it looks like the next resistance once again, as I've drawn, 5,900, and then around 6,800. But before we get there, I think what's going to happen is we're going to pull back, and this level here, this 5,290, is an obvious level. It's almost touched there, and another support level is this 4,900 area, right? We could do something like this and then bounce up. The problem with Chinese stocks right now is, as most commentators are saying, it's basically they have a very hot tech sector for AI, robotics. Some of them are world leading, or at least on par, if not very close to where US is. Very competitive. Some would even say better than the US in some regards. Depends on which section of the technology you're talking about. And also they have, but they're a hot tech economy, but a very cool consumer economy. Basically, people are not spending. They've just had their housing crash like the 2009 scenario, and in the US. However, they're not doing the kind of QE that US did. So they're trying to heal naturally, and you can see that's going to take a lot of time. They're not doing what US is doing. Probably not many countries can do that, unless US goes into a QE session as well, because if anyone printed that much money, then their currency would just crash. So let's have a look at a few stocks that the US has in AI and that China also has in AI, and we can compare them. So for example, folks remember this was like posted March 15. This is a chart I keep on updating. This is because this is NVIDIA. I had to start drawing it around December. I said it's going to bounce up, and then dip down, and then basically go down to like 97 area. So far we've hit 105, and the dips are much larger than I anticipated. But most people should know that the reason why I picked this was because this is January 27 tweet. And this is actually the screenshots from my Discord, and this goes all the way back to December 28th. So it's like even 2 weeks before I posted on Twitter. So I said NVIDIA is going to make a right shoulder here. This is going to be a monster shoulder, head, shoulder pattern, and that's when I first drew this wriggly orange line, saying that's where I think NVIDIA stock is going to go. And it's gone down a lot quicker than I thought. This is again December 28th when I spoke about DeepSeek, when nobody's ever heard of DeepSeek. It says open source AI from China. And it's they're doing things, beating US AI using like just 1/30th of the cost, money, resources, and GPUs. And no one paid attention to it, and boom, then all of a sudden we find the entire US stock market is down. So it's not the reason why the Nasdaq Magnificent Seven stocks, right? All seven of them are basically in recession territory right now. Once they go down by 20%, then that's called recession territory by stock standards. And the reason is because pretty much all of them have invested heavily in the GPUs of NVIDIA. So NVIDIA, once you show the world that you don't need all these NVIDIA chips, then basically, because the DeepSeek way, which prioritizes the algorithm for calculation, then basically you end up with not as much demand for these GPUs. People argue about that, but so far the stock market is voting with me and saying, yeah, that's what happens. And so NVIDIA has gone down from 145 to like 105 now. And all the other companies like Facebook, Google, Microsoft, they all bought into this theory that you need so many GPUs and invested like $10 to $20 billion each into these GPUs. And now they're like, maybe they don't need 80% of that or 70% of that. So they've spent a lot of money, which they probably can't, which probably, I wouldn't say wasted, but they don't have a use for it right now. And a lot of people would debate with me about this, but hey, the Nasdaq is down. The Magnificent Seven is in bear market territory right now. It's down 20%. Okay, so let's look at a few hot contenders in AI from China. And first of all, many folks may or may not be aware that some of them are actually just listed on the Nasdaq. If you want to, for people who likes Nasdaq stocks, like these ones, they can you can basically use the same broker and get these ones. So like Baidu, that's an AI stock. Alibaba, we all know, it's been kind of famous right now. And also so for example, probably we need to look at Hong Kong and okay, so those ones are listed in the US, plus more. Here these numbers are the codes of stocks in Hong Kong. So for example, that one, 9866 is NEO. They're listed in Hong Kong. And so Alibaba is dual listed in the US and in Hong Kong. And and so for example, this 2020, that's Sense Time, that's listed in Hong Kong. That's another AI stock. The one I'm looking for is actually this one, Xiaomi, right? That's actually MI. That's actually an AI stock as well. Let's go ahead and try to look at Alibaba first. So Alibaba is kind of like the favorite of Wall Street right now because let's get it onto a monthly chart. The reason why is because Alibaba has this. Well, DeepSeek actually doesn't have any. It's not listed. So even if you think DeepSeek is great, you cannot buy DeepSeek stock. So what can people get is basically the next best thing. Well, is Alibaba. Alibaba is listed on both the Nasdaq and in the Hong Kong exchange. However, it's mainly an online retailer. It's like Amazon in China, right? It's also like kind of like PDD, right? That's another China retail stock listed on the Nasdaq, but not quite the same thing. And the problem with it is that in the past there has been too much, and even today there's still too much competition. There's JD.com, that's listed on the Nasdaq. There's PDD. There's also TikTok in China actually sells a lot of stuff as well. So these are all competing with Alibaba, who used to dominate this space, and it's gone down like, from 320 down to $60. So gone down 80%. But that's actually just quite normal because a lot of these Hong Kong tech stocks or China tech stocks have all gone down this much. But lots of people would say Alibaba's growth and its future potential is not really in the online retail area. It's in the cloud business, right? Cloud computational centers, data centers, that business. So basically, it's very much copied Amazon in terms that it's got the online retail business, and when Amazon moved into AWS, Alibaba also moved into the cloud business. That's where the copying ends. Where Alibaba has taken a lead is in AI, because it has a program called the Alibaba AI is called the QWEN, the letter Q, WEN, QWEN Max 3.5, and that was leading the world for a moment for about a week before Grok 3 came out. So these what you have to understand about AI is that these it's like a car race basically. In a very exciting car race, they do this car's leading, and then this car's leading, and then they're basically just leading around every turn. Basically, that's what's happening. You had ChatGPT 4 was leading, and then DeepSeek came out and could be seen as the leader, and then QWEN from Alibaba came out, and that was the leader, and then a week later, Grok 3 came out, and now I think DeepSeek did another update to its version 3, the DeepSeek version 3, not the R2, not the R1, R2 model, but the V3 model. And I haven't even checked the scoring board, but it's a big improvement. So basically, you can see it's a very competitive field, and for Alibaba, my worry is about its its retail business. It's not like a pure AI business. Like imagine if Amazon had the world's leading AI model. That's kind of the number 2, top 3 world AI model. That's kind of the situation with Baba right now. But Amazon doesn't have that much competition in the US or in a lot of countries. But Alibaba does. Even in China, it's got that stiff competition. In terms of price, the pull back to this level here, 126-ish area, 125 is that's obviously a top in tail forming on the monthly chart. So we could see like a bigger pullback, but I don't. If it loses like this 123, 124 level, then that's not good, because we can see this is a major support level. Once it breaks through, it's best not to break down here. If it can just consolidate here sideways like a bull flag, and then for folks who like this stock, maybe pick it up around 123 and 24, and then up we go. So that's for Baba. Let's have a look at another surprising pick, right? Surprising pick that folks may not think of it as an AI stock, and that is this one, Xiaomi MI. They're actually a cheap phone seller in China and in India. So their phones sell into India as well. They've gone on from $8 to $60. So that's a 7.5x run. So some of these are like, I keep on saying to my Discord, that, hey, some of these stocks, tech stocks in China, are kind of like cryptos, kind of like larger size cryptos. And if you look at a large crypto like Phantom or Doge, it's already like $5 to $10 billion in market cap. So what's the difference between buying that or buying a large China stock where it can also do 7x, right? In fact, a lot of these China stocks are outperforming the crypto right now by a long shot. I mean, even look, let's just go back to Alibaba for 1 second. I mean, I showed you guys the historical chart, but if we just look at the recent chart, since let's say since the start of 2024, it's gone from $64 up to 145. So more than 2x, still holding the highs. All right. Xiaomi is a cheap phone maker in China, and most people are like, that's what's that got to do with AI? Well, they just came up with the best, fastest four-door car in the world. There's this track in Germany, like it's called it's not called Nuremberg, but it's something like Neuron something, and the circuit, it smashed the world record running around that circuit. So that means it's faster than Porsche, it's faster than a Lamborghini, it's faster than a Bugatti. We're talking about four doors, not the two-door vehicles, but in the four-door sedans, the Xiaomi car basically is leading the world right now, the fastest. And yeah, well, and you're probably wondering why is a phone maker actually just making cars right now? Remember how Apple actually wanted to come up with the Apple car. They gave up on it because they realized how difficult it was. It just couldn't be done. Well, this cheap copy of Apple phones, this cheap phone from China maker, Xiaomi, now makes the world's fastest four-door cars. That's on record. You can just Google it yourself, right? So they basically have proven that they can handle tech. They can produce some of the best EVs in the world. Their phones are kind of mid price in the mid range. They sell a lot of them in China and India, and I'm guessing a lot of them probably in Southeast Asia and Latin America as well. And so, what the founder called Lei Jun, right? The founder of Xiaomi did recently raised a lot of eyebrows. He poached the top researcher from DeepSeek. This is a lady who's only like 26, 24, 26. Incredibly young. This girl, in fact, we can call her. This lady. And he poached her. He pays her 10 million yuan, which is about 1.4 million US dollars a year. That's her salary. To just do AI for him. And so people are like, well, why would this company that makes cheap phones and cars want to get this girl who does AI? Well, do they have to? Are they just gonna waste money by getting her paying her 10 million yuan, which is 1.4 million US dollars a year, and other people like her just sitting around? No, of course not. He's proven that he can successfully get out of the phone business, get into the EV racing business, sports car business, and then go from that to basically into AI. He hasn't announced it, officially, but it's so obvious now. So the market is betting on that he could do really well because this guy has shocked Apple. He's shocked everybody. Like, Apple couldn't build an EV, but this cheap phone company has built the best, fastest EV in the world. Faster than a Lamborghini, faster than a Bugatti in the four-door race. I'm not talking two doors, four-door race. You can Google it. So, again, this is starting to look like a topping tail. And in the pullback, if we are looking at this 39.4 area, that would be just below $40. That would be, this 0.618 Fibonacci number, roughly. And if it goes down to this 35 to 33 area, see how this is 50% of the Fibonacci retrace, but it's also where the old top was. So if it gets there, then it might be quite attractive for me personally to look at. This is, I keep on saying that some China stocks are going to basically become the new Magnificent Seven. And over the next 5 or 10 years, we're going to find them in China, or at least some of the Magnificent Seven. I call them the Magnificent 11. There's probably like 11 of them. And Xiaomi is looking like it's definitely up there. Third largest cell phone company in the world, Apple, Samsung, Xiaomi, and also now like luxury sports car EV in the world, and they're moving into AI as well.